Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So as we said, yesterday it was more chances to see the downward continuation in the gold just because of the performance of the interest rates. So as the real interest rates have shown the bounce up this week, so if we'll take a look at the chart, you could see this performance of the real 30-year interest rates shows the pullback from the minus 60 to minus 43. As nominal interest rates, if you'll take a look at the treasury bonds, you could see also this week is coming higher. So here it was a couple of days ago, the bullish reversal candle has been formed. It also suggests some bullish performance, and in general this is happening with the anticipation of the CPI numbers, which also could add some pressure on the gold. As a result, yesterday on the gold market we've got the pattern that we suggested that it might happen, and we are waiting for that. It's because it could change the shape of the short-term performance. So it patterns itself, as bearish grabber suggests, the taking out with these lows, and that market could drop further. So as a result here, maybe later some different bullish pattern might be formed. Maybe this will be the hand shoulders or something of that sort. But in the current moment, in today's session, it should keep us away from the taking any new long position by far. So this is another question, whether you would like to take part in today's journey with the CPI report, you would like to trade it and play with it. In this case, you could consider taking the short position based on this grabber with the stop somewhere above this area, be possessed for a possible downward continuation. This is also possible, but one thing that we could say is definitely we should not consider taking any new long position by far on the gold market and wait for another leg down and see what will happen around 1760. Well, in general, this is not new because we talked about this previously and talking about this for the whole week, that for the bullish performance, for performance on the daily chart, we need to see what will happen with the major 618 support and whether the market will be able to show any more or less positive response on this level. And here we still keep watching. Whether to take part with this bearish trade, this choice is up to you. The pattern stands in place, so you better than me know how to deal with this pattern, and this is not the first time when we see it. So on the 4-hour time frame chart, that makes us think that our previous action could be transformed to free drive, as we suggest the reaching of the COP, as we said, and take a look now around the COP, around the major 618 support on the daily. We have good envelope of the extensions. So first, you can see first drive, second stands at 127.27 of the first, and the third stands in 1618 of the first and 127 of the second. This is perfect and classical combination for the free drive pattern. So it means that minimum target that we suggest that could be reached on the way down is 1755. It's completion of the third drive. Potentially, market even could collapse lower. We do not know that. Maybe it will depend on the CPI, maybe some other reasons. So that's why we're considering currently only nearest standing target. So, and the bearish grabber that we have on the daily suggests that it might happen. So market could go to this area. So that's what we have on 4-hour time frame chart. Correspondingly, by watching on the hourly chart, as we said, with this flag, yes, the market probably will go down. That has happened. And here, if you're interested in taking the short position, you could consider a few levels to take the short position. So first of all, this is minor levels. Let's pull back, for instance, to the 78. This will be confluence, but potentially, as you can see, here might be some kind of the head and shoulders as well. So in this case, market probably could show the pullback to the 1784 before it will go to the downside. So probably I would consider these two levels, this one and that one, for possible taking the position. So conservative traders could wait for 1784, while the others could combine both of them. So for instance, take some part here, wait, if pullback will be deeper, and take the rest around this one. But this, for those of you who would like to take part in today's CPI report and who would like to take the short position with the grabber and with the 3-drive patch that we have. That currently, guys, briefly the situation that we have on the gold market.